members. Welcome to today's CPE State Circle meeting on Goods and Services Tax, recent changes and updates. The session will be handled by S. Vinodh. Vinodh is a director in a leading Big Four firm's tax and regulatory services. He is a chartered accountant by qualification. He has over 10 years of experience in advising clients on a range of Indian tax laws. Vinodh specializes in advising clients on indirect tax laws applicable on transactions on goods and services, including central excise, customs, service tax, VAT, and foreign trade policy. Profuse experience in advising manufacturing clients with a specific focus on automotive and infrastructure sector. He represents clients before the tax authorities. Advised clients on a review of tax implications and optimization opportunities in various contracts, including turnkey projects. Vinodh is a member of expert committees on indirect taxes in Madras Chamber of Commerce and Industry. He has presented various papers in seminars and conferences of chambers, professional bodies, and industries. With this prelude, I welcome the speaker. Please put your hands together to welcome the speaker. Before I hand over the proceedings to Vinodh, let us rise for ICE motto. Thank you, members. Over to the speaker.
Good evening to all. Thanks to SARC for this opportunity. I think GST is always an interesting topic, and discussing amongst the professionals is also very important because you get to also learn from whatever experiences they have. So I'm open to the learnings also. And in terms of the recent developments, I think with any other law, the recent is probably even 1 year is recent, you can say. The GST, it's almost like a minute-to-minute changes. And even last 1 month or 1 week, you have so much of changes which is happening in GST. It's hard to kind of cope up with the various developments and what is happening. So I had some kind of cut-off date in my mind and try to cover some key points because key points. So it may not cover all the changes which has happened in the recent past. So if you have specific inputs on any points which you want to clarify or you want to have a discussion, I'm open to have the discussion. But primarily I will cover some major points which has happened in the last 6 months or so, because it's a very continuous learning process, and we are going through a regime which is a very landmark regime in the last 1 year, 1.5 years, where so much of changes have happened in indirect tax as a whole. So we can keep it as interactive considering the size of audience, but if something goes a bit beyond just a discussion or clarification, it gets into more discussion, I would like to take it offline so that we can save the time for the rest of the members also. So with that, we start. So in terms of agenda, I just have broadly topics on what is introduction, just a key introduction, proposed amendments to that, some key amendments to the rules which has happened. Advanced ruling is a very important concept in GST, and we are seeing a lot of rulings coming from the advanced ruling. Of course, some other aspects which is also important. Just to have an introduction, this is almost like we are into 1 year and 4 months almost, or would say, yeah, 4 months completed on GST, 16 months of GST. What GST has done in terms of taxation, or what has happened? One constitutional amendment led to the entire indirect tax reforms being made through GST. There were 4 central legislations, 31 state legislations, 29 GST council meetings, more than 350 notifications, 100 plus circulars and orders, 100 plus FAQs and flyers. When I say FAQs, 100 FAQs, not the questions alone. The questions can be much more than that. The FAQs itself is 100. 100 plus writ petitions and advanced ruling. And in fact, advanced ruling is going like anything, and it's increasing day by day. So this is the gamut of change which has happened, or in terms of the volume of information which we are talking about. So obviously with this kind of a reform, you are expecting a lot of kind of interpretations, discussions, views or opinions, and it's very clear that obviously as a professional that no two professionals or nobody can need to take the same view. Obviously we'll have different views. The question comes as to how you can advise the clients and how we take this forward. But nevertheless, it's a wonderful opportunity for the professionals to take up on GST, because GST is one topic, at least in the recent past, which will be active for much more years than probably the earlier topic, because that such is the size of reforms. When you talk to many people, obviously after 1 year there's a feeling that it's more going to be compliance, but I don't believe so, because compliance is an important part and definitely key in the last 1 year. But I think that is slowly settling in terms of the compliance. The next important is on the interpretations and positions taken by the companies, and what is our role as professionals in advising the clients, and how we can take this forward is a very important aspect. So I think as a professional also, it is very important that we keep abreast of the changes in GST, because it's quite going to be impactful for all the clients. So what is a quick recap of GST journey is obviously the GST compliance and filing of statutory returns was the major kind of milestone in the last 1 year, because that was occupying the time and mind space of all the professionals who are engaged in GST practice, and also companies which are doing the GST practice, because that was one dominating aspect, because you had everything to be filed online, the GST and servers was not working, there was a lot of portal issues, all those things were happening in the last 1 year, and we cannot say it is fully settled, but at least we are getting to a stage where major issues are not getting raised, but at least some of the points are getting addressed. But slowly we are getting used to at least filing returns on a regular basis without much of an issue, except for some last minute technical glitches. The next major activity was of course the vendor reconciliation, where the companies were taking credit based on whatever invoices and documents they are having. But when you go to GSTR 2A, which was there in the GST portal, it was showing some different number. How do I reconcile these two information? It was a major thing which was concern for clients, because some of the differences were going to crores for many big companies, and even for smaller clients it could be thousands or lakhs, but there was no certainty as to what is my position. You would also seen that the government would have treated things that you can take credit, but don't bother about 2A reconciliation, still you can take credit. It's more reconciliation can be done at a later point of time. What they're saying is right, because 2A shows what has been filed by the vendor. Now you are taking credit based on what is there with the invoice with you. Strictly speaking, if the vendor has not filed 2A, what is the recourse for the company? Should I reverse the credit or not? At this stage, many companies, and it's our view also, that we cannot reverse the credit only based on the fact that it is not there in 2A. Because 2A is one important proof for ensuring that the vendor has paid tax, but it is not the conclusive proof for payment of tax. Because 2A only shows what is information which is there in GSTR1 filed by the vendor. In fact, what is there in GSTR1 is only outward supplies made by the vendor. It is not even payment of tax, because payment of tax happens through GSTR3B. But what is happening in GSTR1 is only filing of returns, and which is getting converted into 2A, and 2A you are taking credit, or you are looking at what is the supplies made by the vendor. So 2A is not the conclusive proof for taking credit. So we can still try to reconcile which is there and what is there in 2A and 1. But then why is reconciliation required? Or why why is 2A reconciliation required? For two reasons. One, if it is not there, you should have an action plan or something which you should do to ensure that the vendor is filed the return properly. Of course, that time would technically expired on October 31st for the vendors. If vendors are not filed in October 31st, whether they can file today or not is debatable, because if the system allows nothing wrong, nothing stops them from filing the October 31st or even the past returns also in the GST portal. So we can still ask the vendors to file the return which if they have filed. Second is, many cases the companies found out that some of the invoice which is mentioned in 2A have not been taken care by them. They have found out the invoice only after finding in 2A. So the 2A was showing something more than what they had. That is because many companies did not take into account some of these activities, like for example air ticket. When you go for travel, your travel agent charges you some amount on GST on your travel bill or the agent bill. That agent bill is only talking about reimbursement of the cost of ticket plus his service charges or commission for the tickets and GST on that commission. He is not charging GST on the ticket value. The ticket value GST is being charged by the airline company. So when the airline company is charging GST, the airline agent would have normally given your GSTN, the company's GSTN, to the airline company. So the airline company would have directly uploaded the information on the GSTN portal. So many companies only found out the fact that they can take credit of those airline tickets because that was appearing in GSTR 2A. So this was also a very important point from a GSTR 2A perspective, why you should reconcile. The third is also an important point is refund. When you, as an exporter, you go for refund. Now, by the latest circular which has been issued in October, or even before that September it was issued, the government has said that if the information is appearing 2A, then the officer can look at the 2A and should not insist for invoices copy. Because when you go for input refund under for exporter, usually the officers ask for a lot of the copies of the invoice which are on which base you are taking credit. The circular said that you need not go to the copies of the invoice and all. As long as it's appearing in 2A, you can get. Even if it is not appearing in 2A, then you go to the documents and verify it. So from that perspective also, 2A becomes very critical. So it is important that we still reconcile 2A with the whatever reconciliation is there, and this has to be done on a continuous basis going forward. Don't wait till the end of the year, because that will be a very big exercise which you will not be able to do normally. So that is on the vendor reconciliation part, which was a very key activity for the government. The next big thing which is coming obviously is the GSTR annual return 9, GSTR 9 and audit report in 9C. As of now, the December 31st is the deadline which is there. A lot of representations have been made saying that it has to be extended because time is not available. The institute is also making, and various forums have made kind of represented. We don't know as yet when they are going to grant, whether they are going to grant, and if they are going to grant, at what point of time they grant, because many times we have seen that the extension has come also after the due date has kind of expired. So it may come on the last minute also. So today we cannot predict that it is going to be extended and wait for it. Companies have to gear up for it. This
turnover is less than
2 crores. Then it is not required. Only, but the turnover should be looked at from the company perspective and not state-wise. You have to file state-wise GSTR 9 and 9C, but the turnover should be looked at from the company perspective, not state-wise.
turnover for 9 months.
year or 9 months?
Sorry?
Turnover for 9 months.
Whole year or 9 months?
See, it is talking about aggregate turnover of supplies only for the company. So in that sense, it should be 9 months, because GST law cannot prescribe something for the previous 3 months under this law. So it should be 9 months only.
No, but then there is a controversy whether it is GSTIN specific or company specific.
So GSTN specific, you have to file the return, that is for sure. But the way they have defined aggregate turnover is PAN based and not GST based. The definition of aggregate turnover talks about PAN based. There is a dispute, but I don't think that will prevail, because to take the position based on that will be difficult. Because then you have to look at each and every, then stock branch transfer if you do, then also it will be considered. So all those things are there actually. But turnover as a company is what I would put it more simply, that is more easier to kind of explain or represent that than state-based company. Of course, you are trying to bring in much more numbers into the audit framework, which is very challenging only, but I think that's how the government is approaching. And till this point of time, I don't think there's any clarification saying that you can look at the GST invoice. So I think when you look at 9 and NC, please, if you're not already looked at or discussed, please, I know 30th November is the tax audit deadlines and some companies are busy with tax audit and all. But look at 9 and NC, there are a lot of information which is asked in 9 and NC, especially 9C is going to be very challenging because it is asking you to reconcile between your financials and the GST. And till VAT, we were more reconciling only with the turnover or output, and that too only goods. But in GST, you are asking to be reconciled for both goods and services, and not only sales turnover, but it is also the expenses. Expense-wise reconciliation of financials and GST is going to be a huge challenge, because they are saying that, say for example, you take something like a printing and stationery in your financials, on which it's printing, and this financial says 1 lakh. Out of 1 lakh, assuming the various invoices of printing and stationery which had GST, or say you have paid 10,000 rupees GST, you show me 1 lakh 10,000 rupees what is GST paid, and out of which how much you have taken credit. And this information has to be provided state-wise. So this is going to be a huge challenge because many companies don't even have state-wise trial balance. They have only trial balance at the company level, not at the state level. So this itself is going to be a big challenge under the GST 9C. And apart from that, the auditor is expected to certify not only what is there in the GST and all those things, it is also asking the auditor to give recommendations on what is the GST payable additionally, or if input as credit is wrongly taken, you have to recommend it. Now if you look at the earlier VAT form WW, it also said that it has to certify, the auditor has to certify that they have complied with the VAT provisions broadly. That was something which was also there, but there you can do that based on the generally accepted audit principles, where sample basis you review and you are making comfort. But here when it is asking specifically about recommendations for any whatever additional liability is there, it's somewhere expecting you to confirm the GST positions taken by the company. It is asking you to validate the GST positions, whether they have paid the appropriate taxes or not, and you have to certify that. Now that is a very, very important kind of requirement, and that puts a lot of onus on the auditor who is certifying it. So again, the certification can be done by the statutory auditor or any chartered accountant or even cost accountant. That is how the provision today is. So it need not be statutory auditor. So it throws the opportunity for any chartered accountant to do it. The question is, one, in terms of volume, are we geared up to handle it? Because the volume of taxpayers who will be required to get audited itself is going to be huge. And even if every auditor is willing to certify, there is supply demand gap there. That's how it is today in terms of the number of assessees and number of chartered accountants who are going to certify. And given that challenge, 31st December looks very, very challenging and difficult, which is what the government is also being kind of appraised, saying that please extend this due date because it's going to be very difficult for companies to comply.
Yeah, the printing and stationery example given by you, it has to be reconciled state-wise also?
Yeah, that's what it's state-wise. See, the biggest challenge is allocation of expense state-wise. You have an expense at a company level. How are you going to allocate state-wise? Do we have the information or not? Now, somehow reconciling is different. Somehow you put the balancing figure something, but when once you are filing something as a GST return and asking the auditor to certify it, the auditor also has to perform his role and has to see how do you allocate these expenses to the particular state. Is it related to the particular state or not?
If it is not reconciled, what we should do?
If it is not reconciled, you can't certify that, so you can put it. Or if it is not reconciled, then the differential you have to quantify it is liable to pay it or not. If it is not payable, then you have to be like a, see, that level of detail is not today available, where you can give a, what is called a disclaimer report or a qualified report. Those things are not there today. As of now, the government is feeling that the auditor will certify and give the report. It is not getting to the Companies Act principles that if you are not comfortable about the numbers, can you give a disclaimer report saying that I cannot validate this. That will not be considered as a valid certification.
No, no.
For each
If you are
GST
not
and
reporting,
you have to give
we-
9 and 9C.
Sorry, I'll come to that.
For each GST and number, you have to give separate 9 and 9C.
Yeah, that is what. 9 is anyway you have to do, because 9, the GST in itself will auto-populate and give you some information. It will come in the GST portal itself. 3B what you have paid, 1 what is there, it will all come in the 9. So that is something which is already there. 9C, you have to split the financials into state-wise and reconcile with 9.
So Each state, each GST and number wise.
GST number wise. In fact, not one state, right? Just if you have multiples GST within the state, it is multiple GST. Sorry.
No, if you are not reporting the discrepancies, we may be.
That's what I'm saying. If you're not reporting, it's not like a statutory audit where you have to report and you can choose not to certify. That is the option which you have. Unlike a statutory auditor, you are being appointed as statutory auditor for a shareholder, you have a responsibility. Here you can choose not to certify. But whether I can certify like a disclaimer, that is not allowed under the GST law. You can still certify saying that these are liabilities which are not being recognized by the company and I am recommending this. But I don't know whether you can give a recommendation saying that reconciliation should be done by the company. That's not how the recommendation can be done. It is something recommendation of any liability which is coming under the GST.
There is any liability in GST or what the association the certification is not required.
Any liability?
In case of GST or
See, strictly speaking, GSTR 9 is summation of what has been done in 1 and 3B. There should not be any additional liability unless you have missed out direct payment which is there in 3B. That certification is not required. That is something the company has to do itself. But when you do with the reconciliation 9 and 9C, you will find out this no, because tax payable as per the financials and this will not match.
No, sir, actually the company has a turnover of 1.5 crores. Therefore, only GST or 9 is required.
Okay. Only 9 is required. Yeah, you are right. This is certification required.
But the company has to see some.
If there is a differential tax, they have to pay tax. But auditor, as a chartered accountant, you are not required. But as a statutory auditor, still you have to certify. You have to report or as per that CARO report, something you should do that.
No, sir, suppose if the turnover is below 1C. Suppose if the turnover is below 1C, that is 9, for example, take 90 lakhs. And if there is some additional liability.
No, 1C is what then? Composition, you see?
Suppose that's no tax audit.
Okay. No, I don't see about tax audit itself. As a statutory auditor, you have anyway a liability to report, no? If you are only a tax auditor, then probably you don't have.
On 90 lakhs, and they declared 8% profit.
Okay.
So now they have to file.
Okay, that is not a requirement under GST law. I can say that much. There is no requirement under GST law. Whether some other Chartered Account Act or some other law expects you to certify that is an independent point. GST law does not require you to do anything if only the company is required to file GSTR 9. There is no 9C. 9C only if it is there, then the auditor or the chart account comes into picture.
But there is some liability in case of 9.
That the company has to pay. If they don't pay, the department can take action. The chart account has nothing to do with it.
GSTR 1, they did not report certain invoices, which now in 9 they want to report. How to report it?
See, strictly speaking, that is what they are expecting that there will be some amendment to the GST 9 because it doesn't allow this kind of differences at all. It doesn't contemplate that you will not report something, you will not report in GST 1, now you want to include. It is only talking about a summation of GST 1 and 3B.
Refund they can deny, but liability definitely.
No, my point is if you have not disclosed, you had the opportunity till September 2018 to disclose it, either as a new thing or amend it. If you have done it in the subsequent month, then you are anyway compliant with it. If you have not done till September, so that is not coming out from the GSTR 9C or law. Now, if you want to go and try it out, you can still try it out in the October return and see whether it has been possible to do it. But the major challenge is the buyer cannot take credit. He can come to you saying that you are not. If it is a B2C, it's not an issue. If it is a B2B, then there's an issue.
Can they use DRC provisions, DRC form?
Sorry?
DRC 1 forms are there. Will they use it?
For that recovery, sir.
Yeah, for the additional liability.
So I think that those are all options anyway available for the government, whether it was part of the normal recovery audit or something. It is not something coming from 9 MC. See, the whole point of 9 is they are just wanting to understand what is the overall tax paid or payable by this company and vis-a-vis how it has been reconciled in financials. I am telling you, majority of this information will go to income tax only. It is not, it's not necessarily required for the purpose of GST also. It is more going to go for the income tax for sharing purpose, and they can have some intelligence on the base on that, and they can take their own actions. Whether turnover as per GST and income tax is matching or not, all those things they will try to match. That is how I believe. Otherwise, I don't see any point in having a reconciliation between the expenses of financials and the GSTR name. Because if you have a credit of so much of amount, you don't take it. The government is not bothered about why you are not taking credit. It's trying to ask you to match the input tax as per the financials or total input tax paid by you as a company and what is credit taken by you. If you are not taking credit of something, how does the government is bothered based on this one is probably only as an information requirement for them to act upon certain other matters, or they want to reconcile as an entirety based on what you disclose and what the suppliers have disclosed, how is it matching. That's how I can see it. I think another important point on the e-way bill. I think e-way bill has been slowly kind of gaining importance, and this is going to be much more important in coming weeks together or coming months together, because the government is going to eventually reconcile e-way bill with GSTR1. So it will be so happening that in some point of time you will have that what is there in e-way bill will automatically come in GSTR1 as auto upload, or the simplified form of return which is going to be there in future, what they are talking about, and you have to just justify. Otherwise the government can issue like 2A and 3B, they are issuing notices. They can issue notice saying that this is there in e-way bill, but it is not there in your GSTR1. Tell me what is the differences. So from an overall perspective, e-way bill is a very important, and many companies are, I think, started kind of more attention, because if you look at one of the important High Court decisions in 2 months back in Madhya Pradesh for not actually entering Part B in e-way bill. This is nothing but the updation of a vehicle number in Part 2. A penalty was levied equal to the tax amount of the, or not even tax amount, value of the goods. It was about 1.4 crores penalty was levied. The High Court upheld, saying that it is as per the law, we can't do anything. Similarly, if you look at the recent decision which happened was in case of Pondicherry. One of the customers bought a car in Pondicherry and then asked the dealer to send the car to his state in Karnataka. So he was a resident of Bangalore. He bought a car in Pondicherry and asked the dealer to send the goods to Bangalore. So when the goods were going from Pondicherry to Bangalore, they intercepted and said that what are the documents is there. They show the documents of invoice which is sold in Pondicherry. Then they say, why is it going to Bangalore? On this basis, they kind of what you call confiscated the goods and confiscated the car, and the assessee went to High Court. High Court said, as per law, what you did is right only. You explain, you pay the tax first, and explain that it's not something for sale or something. It is only a individual who is using for it, and get the refund later. So the High Courts are also not trying to intervene in a e-way bill which is strictly required as per the GST, and they are more tending towards it. If it is there as per law, you should follow it. So a small error also can have a huge impact in. So we are used to a check post error in the VAT, which was much more different now. Now it is clearly different, and though there is no official check post in terms of the GST, but a lot of interceptions are happening on vehicle movement, and the e-way bill details is being properly monitored, and there is a deviation, they are levying penalty. So it is very important that clients and companies are following this e-way bill very scrupulously, because that is going to be a biggest challenge in going forward. So there were quite a few amendments which is to that, which also will discuss, and also multiple amendments to the rules. So this is what I want to have a background before we start the proceedings. See, one amendment which I have not covered, which is very obvious, was that they have retrospectively amended the Act to provide that cess is not eligible to be carried forward. Education cess and other cess is not eligible to be carried forward. There is a lot of debate and lot of kind of petitions and all challenging that how can they do retrospectively and all these things. But as of now, it appears that they are not allowing to transfer credit from the earlier regime to GST regime in respect of all the cesses, whether it is education cess, Krishi Kalyan cess, or any cess which was there in the earlier law. You are not allowed to carry forward under the GST law. So that is something, one important point. Second important point is this Amendment Act. Though on education cess it is retrospective, this whole Amendment Act itself is only given assent by President, but it is not notified. So it is yet to be notified. So till date, you cannot call that CGST Amendment Act 2018 has come into effect. Only when the bills, CGST bills, corresponding SGST bills are passed in all the state legislative assembly, this Amendment Act can come into picture. You will see all the books which is also having this Amendment Act, but strictly speaking, today the Amendment Act is not effective under the law. It is only the old law which is prevailing. Once all the state assemblies actually ratify this, then only there will be a specific date notified, and from that date it will be effective. So today it's still the old law which is prevailing. So they have made some few amendments to the section 7 saying that activities to be treated as supply of goods as referred in schedule 2. So I think this is something more of a technical amendment in legal, where unless it is a supply, it will not get covered under schedule 2. So they wanted to be very clear saying that even if it is not supply, such activities will be deemed supply as per the law. That is what they have amended in this point, very important. Second was a case where registered person shall pay tax on based on any purchase from unregistered supplier. Of course, this provision has been suspended till September 2019. It is not effective till now. One of the important aspect is that there are two things in reverse charge. One is an unregistered supplier supplying to you, that will not get covered under GST or reverse charge until September 2019. But specified like GTA and some other sponsorship and all, that is still, or government services, that will still be liable to reverse charge mechanism. So you have to continue to pay a reverse charge mechanism. That is not deferred. What has been deferred is only if you are purchasing goods or services from an unregistered supplier, then there is no liability for you to pay under reverse charge mechanism. You can continue to operate like what you are doing. If he is not charging GST, that is his issue or his problem. If he is not doing it, that is something government can take action against him. But from your perspective, you are not bothered. But whereas if it is a GTA service, whether he is registered or not, it's not an issue. You have to pay under reverse charge mechanism as per the law. So that is something which we have to take care.
Excuse me.
Yeah.
Come again on the schedule 2.
Yeah. See, this was more of a legal amendment where what they said was, they had said that this supply of goods as per schedule 2 will be something. But if you look at schedule 2, some are made deemed supply. So the section referred as something should be supply for it to be covered under schedule 2. Whereas it was kind of contradicting schedule 2 under the section 7. So they tried to address that point. This is again the composition here, 1 crore to 1.5 crores, they are making it going to be extended, but again, like I said, it is not effective till now unless the amendment tax is notified. So a composition deal can be eligible only if the turnover is less than 1 crore. So one more point was that deemed receipt of services. Now I am not a person who is receiving service, but I am receiving a invoice for services which is being actually performed to somebody else. Can I take credit of that? That is allowed under the section 16, which is proposed, that you can bill it to a particular person, but actually service can be used by that person. That was there more for goods. Bill to ship to concept we know in terms of goods, where you bill the goods to somebody but ship it to somebody else. This concept has been extended to the service also. But only thing is they have not made a corresponding amendment under IGST Act. IGST Act also section 10(2) of IGST Act actually had some reference to bill to ship to for goods. But there is no reference for services in that. They have only made amendment in the credit section but not in the bill to ship to under the IGST Act. So we need to see how this will have an effect, but as of now they are saying that as long as you are receiving a bill for services, even though it has been performed to somebody else, there can be credit of that. So this is one aspect is schedule 3. I will come to schedule 3 later, but if you have a schedule 3 supply, then it will not be constituted as an exempt supply except for transaction and sale of land and building. What a schedule 3 supply is nothing but high sea sales or inbound warehouse sales and what you call merchanting trade, which I will come to. So these are some important activities in schedule 3 which are not subject to GST. But even though they are not subject to GST, there is no reversal required for input tax. You can take input tax credit and there is no requirement to proportionately reverse the credit on these transactions. So they have also tried to amend the definition of ITC in terms of certain aspects. What is relevant is this one, where they are talking about an employer today is not eligible to take credit on rent a cab or a catering services, food and beverage service. They are saying that they will allow credit of those services if it is obligatory for the employer to provide its employees under any other act. If particular service is being provided by an employer to employee, which is obligatory for the employer to do under any other act, then those services you can take credit. Example is, one is the Factories Act provides that any factory which has more than 250 employees should necessarily have a canteen. So a canteen should be there in factory. So you provide food in the canteen. So you can take credit of the food being provided in the canteen on what bill being raised by the canteen service provider. Similarly, this one, the BPOs have under Shop and Establishment Act, it is mandatory for women employees to be for them to be transported only in a cab after a particular time. So they may have some kind of a facility. So if it is mandated as per that law, they can take rent-a-cab credit of those facilities. One aspect on this canteen point is that today the canteen service itself is 5% rate. Now whatever the service provider is charging, it was earlier 18%. Now they have specifically said that it should be only 5%.
Excuse me, the contradictory AR ruling, Maharashtra said 5%, Tamil Nadu and Kerala said 18%.
On that canteen. But that was all before that notification. No? The notification specifically, so that was an interpretation based on the circular given in the context of hostel. So they have tried to apply the hostel benefit for canteen also, which they said no. But the rate itself is amended, schedule itself. Where specifically they have said that any service provided to the factory canteen also will be eligible for exemption or 5% rate. But there's a catch to it. The law also says that, or the law also requires that you can take input as credit, but normally you are providing as food supply to the employee. Under GST, employee providing service to employer is not taxable. The salary is not taxable. Schedule 3 is covering salary. But employer providing service to employee is not exempt. So, if you are recovering some subsidy from the employee for nominal rate of food which you are recovering, then the GST law requires you to charge GST on that. That is what another AAR says, that you have to charge GST on that service. Now, there also you can still charge 5% or not is one aspect of it, but it is the interpretation is you can still charge 5% because provided by a canteen is saying. So somewhere the canteen service provider is providing to the company and company is providing service to the employee to take credit. So if I am charging output 5%, I can't take credit of input as per the rate notification. The 5% rate notification says that you cannot take credit of input credit because your output is 5%. So even though this proposed amendment is going to allow me benefit of input as credit if it is mandatory as per the Factories Act, that notification will deny me. So what is going to happen in canteen is 5% on input tax, 5% output tax. Effectively, you have to pay 10% cost is there for you, which was earlier 18% because the canteen service providers were charging 18%. The 18% cost has come to 10%, but that doesn't mean that you can take credit of the 5%. The credit of 5% is not allowed. So that is an important point. Some people think that after the amendment I can take credit of the 5%, which is not possible because your output is also 5%.
So what if the canteen service is provided inside a special economic zone?
See, strictly speaking, if it is provided directly to the employees of the SIZ, then there is no exemption. But if it is provided to the special economic zone, it is still eligible. But practically, many people are not sure about whether they will be giving benefit or not, because then they have to get some clarification from the development commissioner, because originally the list of services which is approved as per the SIZ was not having this canteen. So the development commissioner was always rejecting it. But in my view, or after the GST has come, that list of services is no longer valid or no longer relevant. But people are still using the same services, but it is not actually relevant because GST law says sale to SIZ or supply to SIZ is zero rated. It doesn't talk about the fact that it should be for only specified list of services and all. It is saying that. But practically, still some contractors saying that we will not charge zero rated, or we will charge it but give an indemnity saying that if tomorrow the government asks, you give me back.
But advanced rulings, they take into the concept of authorized operations, all these.
That's what I'm saying. So that authorized operations is coming under Rule 96 if you go for a refund.
Okay.
Strictly speaking, under section it is not there. And refund also, I will have to go only if I have input as credit. So why should I pay tax is the question, first question. So authorized operations is more linked to actually refund. So that is one interpretation. Second is, even authorized operations should be covered because providing food in a particular zone is something authorized operations only, nothing wrong. If I'm allowed to set up a food court, that itself is authorized operations. How can you say I will not it's not authorized operations? But the main challenge is the original list of services. If you go back to the list of services which was being approved by the development commissioner, that was not having that list. That was the major challenge. It's a practical challenge which is continuing now also. So I think the issue in terms of credit which was there in Sunbag continues in GST also. I think somehow the government was not magnanimous to allow the benefit much more than what was allowed, except for, of course, the stationery and other things which we are not getting credit under the earlier law, which we are getting credit, that is for sure. And virtually all factory companies which are not getting any of the credit of the office assets which is there in the corporate office, they are getting credit today. So that's the biggest plus for the factories. But apart from that, whenever it comes to employee aspects, that is the government is very clear they don't want to give. And this all the employee recoveries is always a debate, and people are not sure why should I pay GST on recovery from employees, because I am just recovering from employees for a purpose of subsidized food. It's part of my employment contract. So that's an argument which is being made. The other point is that assuming your food cost is 100 rupees and you are collecting employee only 10 rupees only, you still have to pay GST on 100 rupees only, not 10 rupees. Because employer and employee are deemed related person under GST, and if it is related person, it should be open market value and not the sale price or transaction value. So you still have to pay GST. Well, virtually you will not get credit effectively. And like I said, anyway, after this no amendment, 5% is the cost. There is nothing credit for you to claim. Earlier, the registration allowed only an SCC unit or each units to get registered separately, even with if it is part of the same zone. Now, if it is part of the same zone, you can have one registration also. So it will not be multiple registration. The other important point was that they introduced a concept called business vertical. If you have a separate business vertical, you can have a separate registration within the same state also. But what is business vertical, how it should be interpreted was all lot of debates. Now they have simply said that if you want to have two registrations, have it. For whatever reason you want to have one factory separately and another factory separately, or one depot separately, one factory separately, you can have it. There is no restriction. But once you have a separate registration, please bear in mind that supply from that factory to depot will be subject to GST. You have to pay GST and then take credit. So once it is two restriction, you have to pay GST. But as long as you are willing to do that, nothing wrong. You can have multiple registrations within the same state. This is relevant for two purposes. One, companies wants to have separate accounts and they want to monitor. Some companies which are looking for demerger or hiving off this particular unit or something wants to have the registration in upfront, so that tomorrow when the issue comes, they can just hive off the registration separately. The main registration will not get affected by this. That is also an important point which we can consider in terms of when you do the registration, multiple registration within the same state. A threshold limit for certain states, they are now granted for higher threshold. Similarly, for small e-commerce operators who are not required to collect tax can avail threshold exemption. Earlier it was not there. E-commerce operators who are having even 1 rupee turnover has to get TCS was there, and now it is not required. Cancellation of registration is actually one provision they are going to insert, saying that the proper officer may temporarily suspend registration until the procedural formalities of cancellation are completed. So what it says is that assuming you are stopped the business and you want to cancel, you apply for cancellation, but then the officer has to approve it. But till the officer approves it, normally what will happen is your cancellation is pending, so your GST is active, you have to keep filing returns. But now they have the power to say that the officer will temporarily suspend the registration, so that will also be affected in GST. You need not keep on filing nil returns. Once you apply for cancellation, ask the officer to suspend your registration temporarily, and so that you need not file the returns on a regular basis. As and when he is convinced and is going to cancel, he will cancel it. That is a better benefit for us. The last point is very important. This is what people have been looking for a long time. Whenever they are issuing credit note or debit notes for some discounts or supplementary claim or price escalation, the GST law requires you to issue one debit note for one invoice. So if you have 1000 invoice, then you have to issue 1000 debit notes. That's how the GST law has been requiring both under the normal physical and also online. So this was a very big difficulty for many companies, big manufacturing companies, because they have thousands and thousands of invoices. For one debit note, if they have to issue, it is going to be a huge impact. Now the law provides that you can issue one debit note for multiple invoices, which is what was practiced before GST. Now they would bring amendment to the act, which is not effective. But more importantly, they have to bring the amendment to the GST portal, because GST portal today will not accept you. Any one debit note will not have multiple invoice number, it will not accept. So that is something which we need to wait for. So the first point is very more regular, just a requirement or just a procedural point where state government, central government department will not be subject to audit under GST. So they will not file this GST or 9C and all, but state government department will hardly file GST returns because they don't have much of tax in place, except they have renting income and all, which they have to pay GST. This is very important because today under the IGST, CGST, SGST credits which they are having, except for one rule which says that the order of IGST you should use first and then CGST and SGST. Similarly, you cannot use CGST against SGST and SGST against CGST, that restriction is there. But there is no restriction on how to utilize your credit of CGST and SGST between IGST. So even if you have excess credit in IGST, you can choose to utilize CGST and then retain IGST. But the amendment which they are trying to bring in, they are saying that you cannot have a situation of IGST credit being there and you are not using CGST credit. CGST shall be utilized for payment of CGST provided no IGST credit is remaining. But if you have IGST credit remaining, then you should first use that IGST and then only come to CGST. So this is something we believe that they are trying to kind of liquidate the IGST credits fully for whatever purpose. But more importantly, I think that's what we are thinking as to what was the background of the amendment. Some of these companies which are having this state incentives and MOUs which they signed the company, they were getting a refund of net SGST paid as per the MOU. So what they were doing was, even though they has SGST credits, they were not using the SGST credits for payment of SGST. They were using the SGST credits for payment of IGST and still paying cash of SGST so that they can get the refund from the government. So they were able to get the refund even though they don't have net SGST payable. But then I think this is something which is now saying that if you have a SGST credit, then if you have also IGST credit, then you have to first set off against the IGST and you cannot pay SGST through cash. So effectively you have to pay it only through credit. So you will not have a situation where you can claim a refund. So this we need to look at multiple combinations and permutations as to where it will hit. For some companies it may not be issued because you have almost equal credits. But for some companies which are having multiple credits or opening balance and all, we need to see how this operates. Principle of unjust enrichment was not applicable in case of supplies made to SZ. So in case of supplies made to SZ, the supplier has an option to make zero rated, or he can supply on payment of IGST and claim a rebate. So that now they are saying that you can only do it provided unjust enrichment is satisfied. That means you should not have collected the amount from the IGST, the SZ unit and also claim refund. That is something which was normal, but the law did not have it, they don't include it. And RBI allows you to even receive the amount in rupees, provided the foreign supplier is able to purchase rupees in the in the origin country and pay in rupees. That was allowed under the earlier law. Now they explicitly say that you are allowed to do that, and that will also be constituted as export of service. I think the amendment to transport point is very important, because if goods are transported outside India, players supply by outside India, what will happen? What was happening was, assuming I engage a person, liner or agent in India and ask him to export some goods from India to outside India. The whatever transportation charges he was charging was between two residents in India or two GST persons in India. The law said that moment both of them are registered in India, you should pay tax on it, even though the goods are going to go out of country or export. So this was unnecessarily getting into credit accumulation or tax payment and accumulation. Now they have said that as long as the goods are going out of India and export and transporting services there, the CHE or any other agent who is actually transporting goods need not charge GST, even though the recipient is an Indian company. So between two Indian companies itself, there is no GST required, provided the transportation is for goods outside India. This again is amendment which is yet to be notified, we need to see. This appellate authority, there was a 10% of dispute tax you have to pay before you go for an appeal. There was no outer limit. So if it is a huge amount, 2,500 crores and all, your demand is there, 1,000 crores. It looks big, but I don't be surprised in GST it may come also, that kind of demands. So in that situation, if you have to pay 10%, it's becoming very big amount. So they have restricted it to maximum of 20 or 25 crores. Similarly, if you go to tribunal, there's a 20% of dispute tax you have to pay, subject to a maximum of 50 crores. So this is what I was saying. One is the import as a consideration. So what happened was, if I as an individual, I am not I'm using some services which is for business purpose. I am not as a start amount, I am downloading software. Actually, I need to pay GST under reverse charge mechanism. As an individual, I am consuming, it's not required. But as a person who is consuming for business purpose, I need to pay reverse charge. But the law had a lacuna earlier saying that only if registered person is receiving services from a foreign company, you have to pay reverse charge mechanism. Now they are amending saying that any person. What will happen is, if I am not registered for whatever purpose, they will say I am not registered, so I am not covered in the provision. So they have tried to amend that point. So this is what is next point is, like I said, the Schedule 3 high C sale is no longer exempt sale. So if you have do high C sale also, you can claim exemption, and also there is no requirement to reverse credit. There was a lot of confusion. There was also advance ruling saying that whether high C sale is taxable or not, and ultimately the government has clarified that high C sale will not be subject to GST. Similarly, in bond sale, when the goods are in bond or warehouse and you are actually selling those goods to another person within India, there is no requirement to pay GST separately. But when the importer or the person ultimately is going to remove the goods from warehouse, he has to file a bill of entry. In that, the BCD will be there and IGST will be there. That will be separate. But there is no separate another IGST to be paid, because there is a lot of confusion as to dual IGST has to be paid on any goods cleared from bond or warehouse to the Indian company, Indian importer. Third is very important, because some companies have transactions where, say, a goods will move from South Africa to Australia. I am having a group company or supplier from South Africa who is selling goods to another customer in Australia, but he will bill to me and I will bill to the Australian company. So it's a trading activity. Sitting in India, I am doing the trading activity, but the goods does not come into India. Since this goods does not come into India, it is not an import of goods, so you will not pay any custom duty. The question was, should you pay GST on that? Now clarified that it is not required to pay GST because it is a transaction which is happening outside India. But this is only from prospective date. The date before this, whether it is liable or not, is open. Some companies have taken a stand that it is not liable at all, because there is nothing which is subject to GST or there is a connection to India. But some are applying the principle that it's like an income tax business connection principle. It is nothing but a supply from a person in Indian company. It should be subject to GST. I think there was one advance ruling which actually held that it is not liable, but then it said that you have to reverse the input as credit because it's an exempt sale. So that anyway will not happen once the amendment is happening, because it is not going to be taxable, and also there is no requirement to reverse the input as credit. So we will move to the rules. Again, I am only going to cover specific rules, not entirely. See, the GST invoice contain lot of requirement on SAC code, HSA code, name of supplier and everything, address and everything. But then the law or the rule is being amended, which said that even if all particulars are not there, the following particulars are there in the invoice, the credit should be allowed. Value of goods, tax amount, description of goods and services, GST of supplier and recipient, play of supply. In case of interstate supply, if it is not interstate supply, then there is no issue. It need not be mentioned. But if it is interstate supply, it has been mentioned. Now this is an important point, because some of the early invoice was not containing these provisions or some these particulars. Tomorrow, if the auditor says that you should, our auditor or the government department audit says that you should not take credit on that, we can rely upon this thing that as long as these information are there, you should allow me credit. Interestingly, they are not insisting on HSN or SAC in this. But in the GSTR 9, they are asking you to mandatorily fill the HSN of the purchase of goods. Output we cannot do. They are asking for all the inputs which you have received HSN wise. Now many companies did not fill up because 3B it was not mandatory. So they didn't fill anything input or information on the HSN details on the purchase. But in the annual return is asking for the details of the HSN. That itself is going to be a big exercise for the companies because they don't have the HSN of all the purchases. Similarly, in the annual return, if you know, it is asking for the credit separately for inputs, input service and capital goods. People don't have a bifurcation actually. People are taking everything under input as credit under GST, under 3B, they are not disclosing separately for capital goods service and input service. So that is going to be a challenge under GST 9. That's why I keep saying that please go and have a look at the Form 9 and NC. You will have a lot of details which is to be filled up and compiled for the company. So this is also another rule 138.1 in information information able. In case of imported goods, the person in charge of conveyance shall carry a copy of the bill of entry, indicate number and date of bill of entry in part A of Form GST bill. Because the earlier form required to mention the supplier's invoice and all, which was not relevant because it's a foreign supplier. Now they have said that bill of entry date you have to mention in the e-label. This is very important amendment and quite a few kind of impact in terms of the exporters. Many exporters either were availing advanced authorization scheme, EPCG scheme, and the EOI scheme, merchant exporter, all those things they were claiming benefit. Now they were claiming benefit under these sections, but they also had an option whereby they can pay tax on their export output using credit and claim a rebate. So many companies preferred rebate option because that is much more easier and you will get a quicker refund of the amount. Whereas if you go for normal, the exporter has two options. One is he will not pay tax on the export, he will accumulate the credit and claim a refund of the accumulated credit. Second option is he will use the credit to pay the output tax on export and then take back the tax paid as a refund. So many exporters were using the second option because it was much more easier. Now they are saying that if you have availed any advance authorization, actually there's an error in that, EPCG has been subsequently removed. If it is EPCG, you can still claim the benefit, but if it is advance authorization, UOU, you are claiming exemption, then you cannot go for a rebate. So eventually you have to only get a refund of the input tax credit, you cannot go for a rebate purpose. So this is being a very important amendment for the exporters. So they are actually putting pressure on the government saying that this should be withdrawn or it should not be allowed. In fact, it was brought retrospectively earlier. Now it has been kind of corrected and saying that prospective from October 9, 2018, it will not be eligible. But before October 2018, you had exports or something, you can still claim a rebate of that. But this is an important amendment for the exporters, and it's something which we need to take into account. This is again nothing much. It's more of a change in formula for claiming refund under inverted procedure. Earlier, the formula did not contain services at all. Now they have asked to include both services also and goods. So I think this is again a small amendment in anti-profiteering authority. It's not relevant for a discussion purpose, but I just wanted to draw reference. Sorry, I think it's not relevant. I'll come to the AIR because I think, like I said, the Advanced Ruling Authority is a very important tool in the GST because I think it gives some kind of certainty. I know it is a double-edged sword. If you go to there, you will also get a negative ruling. But many companies are actually trying to even get a negative ruling because at least it's certain. Rather than being an uncertain ruling, which is a position which you are taking for long, it is better to take a position which is certain. And it's also being used as a competition strategy where your goods is at 18 or 20, you are not sure, but the competitor is charging at 18%. Go and get advanced ruling, it's 28%, and then make the competitor also charge at 28%. So it's also being used at that kind of a strategy. So in both sense, I think advanced ruling at least offers some kind of certainty, and the disposal rate is quite high, and the time is also very good because Earlier advance ruling used to take years and years. Now it's average 3 to 4 months to get the ruling. Some cases it takes more time because of the clarifications or that they ask for further details, but broadly it takes 3 to 4 months, and quite a few updates are coming, and it's also creating a lot of buzz in the WhatsApp because now every advance ruling is discussed in the WhatsApp. Earlier people were not even bothered about CSTAT decisions, but now tribunal decisions are not bothered, but now they are bothered about the advance ruling decisions, and it's being reported in Economic Times, it's being reported in the kind of Facebook and all those things. So it's a very kind of happening thing in terms of what is happening in GST. So the first ruling is very important ruling. That is what created a lot of buzz. It's in the case of Columbia Asia company. See, it was a hospital which was virtually not having any output tax because everything is exempted. What it was doing was, it was having a corporate office which was doing some support service for the entire hospital. The hospitals were actually situated in various states. So though the hospital is exempt from taxes, but the corporate office support which was being done from the hospital or the corporate office, they wanted to do a cross charge from the corporate office to the various states, because the corporate office is functioning for the entire country, so multiple states, they want to do a cross charge. So in fact they were willing to pay GST on that. The only thing which they went for advance ruling is, should I include the cost of the employees also in the cross charge? Okay, just to step back, why is this required? See, since GST operates on a state-wise principle, the logic is that you take credit or output tax relevant to that state. You have a corporate office where 50 people are sitting who are controlling the entire operation across India. So you have a rent in the corporate office, you have administrative expense in the corporate office, some advertisement is being built to corporate office. All these are not services which are consumed only in the corporate office. It is being consumed in the various states. Say, let's take an example of a Samsung. So Samsung is having a corporate office and it is having multiple states where, or I think HUL is much more better example because it is a FMCG company. It is having a corporate office in Bombay. It is having multiple state operations across India because they are selling goods across India. HUL has a huge advertising cost. Advertising cost will be entirely billed to corporate office. And similarly, rent of corporate office is a huge amount. All the services are being billed to corporate office, but corporate office is functioning for what? For all the branches. Since each and every state is a distinct person under GST law, the supply between one person to another person of the same company itself, but distinct from a GST perspective, should be subject to GST. That is what GST requires. So effectively, the corporate office is functioning for the other states also. The corporate office has to charge to the respective states. Otherwise, what will happen is, corporate office is taking credit of the entire amount of input services which does not belong to them entirely. It is not attributable to the corporate office or state where it is being located. So Maharashtra state in the HUL example is taking credit of all those input services which is related to various states across India. So that is not allowed, is what the principle is. So Maharashtra has to do a cross charge to various states. So coming back to this case, so this company wanted to do a cross charge from the hospital corporate office to various states. It said that we have covered all the rent and administrative everything, but we want to know whether the cost of employees should be included also. So the AR peculiarly concluded that employees of the corporate office is the employee of that state. So the employee is working for that state and he has to do a cross. You have to include the cost of employees also for the purpose of cross charging to the respective states. This, in our view, is a very, very kind of a narrow interpretation, because employee is not employee of a particular state. Employee is of the company. So if you apply that principle, so even employee going from one branch to another branch, you will say it is supply. Say, for example, a CA office has one branch in Bangalore. This audit is coming in Bangalore, so somebody from Chennai is going to work in Bangalore only for purpose of this one. So you will have to then do a cross charge from Bangalore to Chennai to Bangalore because the employee is there. But take a situation where he is deputed in Bangalore for a certain period. Then there is a different question which is arising. But if he is going to do only a service in Bangalore and coming back for a limited purpose, can you say that employee is working for that branch, so effectively there should be a cross charge from this branch to another branch? These are all very, very open questions today, and it's throwing out a lot of interpretations. Unfortunately, what will happen is these questions will keep on rising and remain in the discussion, but many companies may not take action. After a few years, the audit will come and ask the same questions, and we may not have the answer, and we may have to face a huge liability. Some of these illogical questions can actually lead to a huge liability or huge demand, which we need to defend. And it's not easy to defend under the GST law, because if you look at the strict provisions of law, it is not easy to defend this point. So effectively, the GST law seems to look at each state distinctly. There's no difference in terms of, there's a huge difference in terms of approach in terms of GST under the earlier law. So based on these decisions, companies are at least now seeing that let us at least do a corporate office cost charges. Whether employee cost should be included or not, each company is taking its own position depending upon what is their. And in that example or the advance ruling of the hospital, the amount which is charged by this corporate office will be a cost in the branches, because they can't take credit, because output tax is nil. They are hospital. That is something which is a cost also there. Second is also another recent case in terms of VServe Global, where an Indian company, sorry.
In case in this hospital example, if all the branches are located within a state, then
there is no issue, absolutely no issue. But there is no other thing we have to, unless they have a common GST. If it is okay, if they don't have common GST, they have a common GST, there is no issue. See, hospitals also one or two specific activities taxable, like the surgery or cosmetic surgery and all is taxable, but otherwise, by and large, and if you have a pharmacy as part of hospital, that is also taxable. So,
if it is a composite service, the recent AR judgment is
third point, it is there. So, second is in terms of the Indian company providing some back office support to a foreign company. Very interestingly, this AR has held that is an intermediary service. Intermediary service is normally based on location of service provider. So they are saying it is not export, you have to pay tax. But intermediary service we understand normally is only where I am an intermediary who facilitates two persons to provide service. I am just acting as an agent or broker. I bring two people together. I don't do any activity on my own. Here I am doing some back office operations for the my group company outside India, and that group company outside India using the services for serving to their client. So they said that you are doing it on behalf of the the group company to the client. So you are facilitating a service being provided by the company or a group company to their client. So you are an intermediary, but there is no proper reasoning for this. But this is also an important decision which has attracted attention. So I just wanted to cover that point. The third is what he was referring to: medicines, consumables, and implants used in providing healthcare service, a composite supply. So I am a hospital. Obviously, when I provide surgery or something, I also provide a medicine to the hospital in terms of providing treatment. Now my cost of treatment is say 1 lakh. Medicine is say 20,000 rupees. Now should I pay GST on 20,000 rupees separately, because it's a medicine per se is not exempt, but medical service is exempt under GST. So the AR has held that actually the use of medicines in this medical services is nothing but incidental to the medical service being provided or treatment being provided. That treatment is a composite supply of service, and there is no requirement for you to pay GST on the medicines being used separately, or tablets or whatever being used separately. But when you purchase a medicine, obviously you will pay GST and you will pay cost. And assuming you have a pharmacy also operating as part of it, which is normal, the pharmacy will pay GST. The pharmacy to the patient which is there, that will not be any supply because it's part of the same GSTM. There is no issue. But assuming for whatever reason you have actually taken a separate GST for the pharmacy and for the hospital, when the pharmacy is supplying to the hospital, they have to pay GST. But the hospital is supplying to the consumer, it will not pay GST. But still, the cost will be the same, because the pharmacy will take rate of input tax, and output tax it will not pay tax, or it will pay tax. But whereas the net cost is nothing but the output tax in the second example. But in the first case, if you are on part of same GST, the input tax cost of what you purchased will be the base. So effectively, this is important because many hospitals have also pharmacy and use medicines for supplies of treatment. That will not be subject to GST is an important clarification.
But in case if the hospital is having single GST and they are entering both pharmacy sales and also medical services, if they are raising separate two invoices, then medical services separate invoice and pharmacy sales separate invoice.
See, okay, we examine this, but we are at least in the client lays on other things. It's not a practice, is what they're saying. If you have a practice like that separately, I'm talking about for a same treatment, you are charging separately for pharmacy and this one. A mere split of invoice should not have an impact in our view. But then your case becomes a bit weak when you are trying to artificially bifurcate the value. You can mention the value also in the treatment bill. Moment you issue two invoices, you are somewhere saying that I am separately issuing invoice or selling you for medicine, I am also giving you treatment. You should not leave room for that interpretation.
But generally for outpatients, you have to raise separate.
No, outpatient separately means you are not providing as part of treatment. Outpatient is a sale of pharmacy, it's been subject to GST, there is no doubt about it. I am only talking about inpatient who is being treated. Outpatient is it's clear, it's subject to GST because the treatment and you are not expected to buy medicine from that place itself. So it's not treatment which is being provided as part of compulsory supply. Now, practically, if you are insisted to buy medicine from that and all, is something practical, but generally, outpatient means he can buy medicine from any other place. If it is not prescribed anywhere else, he may still come here, but that doesn't mean that it's a compulsory supply. Compulsory supply should be in terms of not only the understanding of compulsory supply from a GST perspective, a business understanding also should be that it is always provided together.
And inpatient also, two separate billing is advised. It will avoid problems.
No. If it will create problem maybe. After this year, it is actually favorable to you. You can still have one billing and you can not pay GST on that. If you start splitting only, there will be issue because medical services will be maximum amount, medicines will be lesser. Doctor's consult will be more than the cost of medicines actually, many times.
Splitting, you are collecting GST from the patient. Once.
No, if you are saying inpatient?
No, inpatient. Splitting the bill, you are collecting GST on the pharmacy or the patient.
In my view, you are not allowed to because after the ruling, the patient can also consider that you should not collect GST on this. But of course, what happens is commercially the input tax of the cost of that medicine is already included in the price. So medicine is say 10 rupees plus GST which is being bought. 12 rupees is already included in the cost of medicine. So I think you can't again charge 12 plus GST on that.
For medical service, there is no GST.
Correct.
But for sale of this medicine,
it is GST. That's why I am saying that if it is part of inpatient service, there is no GST. But if you go as an outpatient and buy medicines, you have to pay GST. Only as part of this treatment, there is no GST. Separately for medicines, it is not being split. This is another important ruling, but again, very surprising ruling which says that if a tool is being used by a vendor to manufacture a particular part and the tool is being provided free of cost by the manufacturer or the customer, then you have to include the value of tool for purpose of GST. This is against the understanding normally because many of the auto companies have manufacturers supplying tools to the part maker and part maker will use the tool for purpose of parts. They will supply the whatever the goods they are, they will only charge GST on supply of parts. They will not include the tool value. Before GST, if you look at from excise perspective, it was specifically mandated that the tool cost should be included in the value of parts because excise followed a principle of notional value where it was the cost of manufacture or value of manufactured goods. But in GST, it is the value of supply. As regards the supplier or part maker, he is supplying parts to me for which he is liable to pay GST. The tool being provided free of cost should not have an impact, but unfortunately this ruling has actually held that you should pay GST on that value including the tool cost, which we are expecting should be reversed.
no, the principal can raise invoice for supplying the for giving the material to the job worker.
That is different. This is different. This is only in the context of tool. In case of principal to job worker, the principal has two options. One, he can choose to claim an exemption and not pay GST and give it to job worker. The job worker will use his material and he will only charge for the job work charges. Second option is if you don't want to do it, you can even charge GST on that The job worker will do manufacturing and again charge GST on whatever he is supplying, that parts he can do it. There are two options which is there for job worker. But many companies are doing for the first option where they will give material to job worker, they will not pay GST. The job worker is returning also, he will not pay GST, but he will only pay GST on his conversion charge or job purchase. So this is another decisions on ITC, input as credit on laying foundations and sheds for plant and machinery. So this was a case where a company was setting up a shed to store a plant and machinery or to protect the plant and machinery, and they claimed the benefit of the input as credit, saying that I want a credit of this because this shed is nothing but for the setting up of the plant and machinery. But then the ruling said that no, the shed is more of a civil construction for setting up, not eligible. I think the way they posted the questions or the way they argued is wrong in my view. If it is for foundation for plant and machinery to be stable, then it is eligible. If you say that I will construct a shed for the plant and machinery, so I should be eligible for that, you can even say the factory building itself is say eligible. Because factory building is also nothing but to store the plant and machinery. You can't take the same argument. So I think the AR probably has rightly held that it's not eligible for taking credit. This is another important ruling where they have said that liquidated damages will be liable to be GST. So many government contracts and other contracts will have a LD clause where for non-performance or any deviation from performance or contractual obligations, there is a LD which is deducted by the contractee on the contractor's payments. Now they are saying that that contractee or the customer should now raise a GST invoice because they are saying that the contractee or the customer is actually tolerating an act of non-performance by the contractor, for which LD is being paid by the contractor to the contractee. So assuming you are executing a project for NTPC or Chennai Metro Water, and you have to do it within a particular timeline of say 1 year, you are not doing it. So they are deducting 5% of your contract value for delay or something. So they are saying that Chennai Metro Water or the NTPC has to levy GST on the 5% and pay GST. Well, it's a liquid damages because it is a tolerating an act of non-performance. So this has been a debate under the earlier law also and today also. I don't think there is any conclusive view on this at this point of time, but the AR has clearly held that it is liable to GST. So this is something which we need to take into account. This post-supply discount also is very important because many companies which are into manufacturing or FMCG companies, other companies are actually issue a lot of discounts. Cement companies also issue a lot of discounts after they have sold the goods. They sell the goods at a particular price. Thereafter, depending upon the market price, they give discounts to their dealers or distributors. Now, they want to reduce the value of supply and claim a credit of the GST already paid because they have paid at GST at the higher rate. Now, the law requires that if you want to deduct the discount for purpose of GST, you have two options. One is you can do it in the invoice itself. It's a trade discount. If you know at the time of supply itself, you can do it. Obviously, this will not be like this because you don't know at the time of supply what will be the discount. There, the law says that you can do it provided there is an agreement to provide such discount at a later date. Second is the buyer should reverse the credit. So if you sell today for 100 rupees to a distributor, on the presumption the distributor would have sold to the customer at 110 rupees. But for whatever reason, he is now selling at only 95 rupees. The market has crashed and he has to sell at 95. So you are giving him a further discount of 10 rupees so that you get some 5 rupees margin. So the 10 rupees you can reduce from GST provided the buyer also should have taken the reverse of credit because he would have originally taken credit of the GST on 100 rupees on the invoice. So you can reverse it. So effectively from a GST perspective there is no benefit for you because you are reducing it and then he has to reverse it. But still companies follow it because they want to have this clear because the price they want to pass on to the customer also, and they don't want to have a situation where the buyer is having a accumulation of credit. What will happen is that if you don't reverse the credit, the buyer will have a accumulation of credit and that will lead to an issue. So this ruling held that the agreement should not only prescribe the fact that there is a discount, it should also quantify the discount, which is not possible at all because normally a post-sale discount will not have a quantification. If I am going to tell that in future you will get a discount, the fact that I don't know the discount amount only I am saying that, otherwise I would have mentioned discount now itself. So there are various kinds of discounts in the cement industry and also auto industry. So some discounts are known at the time of supply itself, some will not be known. So each and every discount has to be dealt differently and see what is the impact on those discounts and how do you actually reduce GST value on that. This is something which we need to take note because many companies are not aware of this and just they're claiming discount independently and without even bothering whether buyer has reverse credit or not. If the buyer has not reverse credit, then there is an issue. Your direction can be questioned. So you have to ensure that your buyer has reversed credit on whatever discount you have given. That is also an additional responsibility on the supplier. So this is the latest decision. In fact, it came yesterday. The nature of supply for maintenance contract. If I am providing a comprehensive maintenance contract, it will contain both goods and services. So I am providing an AMC of machinery. I am saying that, or AC, whatever AC. I am saying that monthly I will charge you 10,000 rupees. Now this 10,000 rupees I am charging because I am saying that if there is a specified part which is there, which is gets damaged or something, I will replace it. Or every month my person will come and provide a service to you. So this is how we generally have a comprehensive AMC contract. Now whether it is a service or not was always a debate, or is it supply of goods separately, service separately. You know, under the earlier law there is a works contract was there, so it was classified as works contract. Now works contract is also part of composite supply of service. So the question is, what is AMC? So the AMC in this advanced ruling has been held that it is a composite supply of service. Even though you supply goods as part of the contract, it's a supply of service. So whatever rate which is applicable to service, only you will have to pay GST. On the 10,000 rupees example which I gave you, you have to pay 10,000 rupees into 18% on a regular basis or monthly basis. Even though you may, out of 10,000 rupees, you will have 4,000 rupees goods value, 6,000 service value for internal purpose. For the customer, it is 10,000 rupees per month. So you have to just charge GST at 18%. So this comprehensive AMC has to be dealt differently. But if you have a separate contract there, you say that I will provide service for every 3 months, and whenever there is a part replacement, I will charge you separately. Then it is not a comprehensive AMC, or it is a comprehensive AMC with a clear bifurcation of supply of goods and service separately. There the treatment is different. There you have to pay service tax or GST on the service value separately, and for the goods portion you have to pay GST on the goods value or goods rate. So the goods rate may be different and the service will be different. So depending upon that, you need to pay tax. So TDS and TCS provisions were not actually earlier, though it was there in the law, it was not properly, or it was not effective. Now if you look at TDS and provisions of TCS provisions have been effective from October 1, 2018. TCS is mainly applicable for only for e-commerce operator, but so it will not have much of impact for normally for business people and also chartered accountants. So I am not dealing with that. TDS is very relevant, but as of now, TDS is only applicable to the government companies or government which are giving contract. So if I am doing a works contract to a government company or a government department, then they have to deduct TDS. If I do it to another third-party contractor, there is no required. So that is currently not been there. So earlier works contract TDS was there under the VAT. That was there for all contracts or works contract. But in GST, as of now, it is only for contracts with government departments. So there is limited applicability at this point of time, but it is going to be extended shortly to other contracts also. But TDS will not be applicable in case of exempt supplies, supplies on which no GST is leviable, supplies covered under RCM, advance paid before October 2018, and tax invoice issued after October 2018. So if because the provision came from October 2018 only, any advance which is paid before October 2018, it will not be covered under the TCS or TDS. Only amounts being paid after 2018 October, it will be covered. Another important clarification was when two government departments are actually dealing with it, should there be a TDS or not? They have clarified that it is not required. In fact, one public sector unit to another public sector. Okay, not only government, even the PSU is included in this. But one PSU to another PSU, there is no requirement to TDS, deduct TDS. So that is also an exemption or clarification given by the government. But this TDS provisions will be slowly eventually extended to all contracts or works contracts. So we need to watch this space as to what happens on this point. So, of course, the major return due dates have already been done, but some of the due dates of ITC 04, which has been there for long now, has been extended to December 31st. Still have time to file GST or ITC 04. This is for mainly job work transaction where you have to display which job worker, you need to file ITC 04. That has been extended to December 31st, 2018. This final return is more applicable for taxpayers whose registration has been cancelled on or before 30th September 2018. So they have an option to file the final return before 31st December. Similarly, there is a declaration of ITC under section 18.1. This is for whenever there is a merger, amalgamation or transfer of business. There is a requirement to transfer the credit from one registration to another registration. For that, there is a requirement to file GST ITC 01. So that has been extended up to September 4th, which is obviously over. ISD was originally extended up to 31st July, but it's a continuous issue from ISD perspective because ISD has been a challenge for many companies which are filing returns because ISD returns are always having technical glitches. What is ISD? It's also important because assuming you have a factory which is receiving some services of say security, for convenience sake you are saying that let the factory receive security services but let the billing be done to the corporate office. This is one example. It can be many services like that where the service is being provided to a what you call a particular branch, but it's being billed to or effectively billed to the corporate office. In that case, the law requires you to register as an ISD. You can take that invoice and distribute that credit to the respective branches because you are paying for service, but ultimately the consumer service is the respective state where the security is being deployed or services are being enjoyed. So the law requires you to register as an ISD. So otherwise what will happen is you will take credit entirely in the corporate office, which is again not right because services are being consumed in the respective state. This tran 1 credit or the transition credit, many companies had an issue and they were not able to file their returns earlier. So they had some technical glitches during the last due date. So they are all approached the High Court and also some approached department to file their returns, extend the due date. Only for those SSCs it has been opened. Selectively opened for those people, not for all. So who have been given to till 31st March 2019. This has been based on representations being made or whatever proof of technical issues which you had submitted to the department. Based on that they have extended those SSCs time limit. So that is also there, which is there till March 31st. So again, e-waybill, some of the recent improvements which has happened is also important. Many times what happens is for the same invoice, people are generating multiple e-waybills. So there was no check or control on that because that will lead to an unnecessary issue because tomorrow you will have one invoice but multiple e-waybills. So now the system will prompt saying that already a e-waybill has been generated for this invoice. Do you want to generate it or not? That system has been facilitated. Similarly, there are quite a few amendments or facilitations has been done in e-waybill because these are all kind of improvements in terms of how do you operate the portal because the portal is quite a developing or working progress system issue. So I think they are trying to as much as develop the portal and ensure that there is no issue. Like I said, e-waybill is a very important development and the government is very keen on ensuring that e-waybill system successfully is getting implemented because that is a very important check for the government to control the overall supplies and GST. Earlier checkpost was there, today there is no control for them to go monitor transactions. E-waybill is a very effective tool for the government to monitor transactions. I think in terms of refund, one important point which I had touched upon earlier was that when you are filing a refund, obviously if you file the GSTR 2A, then that's enough for the officer to issue a refund. He should not get into the invoice copies and all. So this can be insisted because now the system of refund has improved significantly in GST. The input refunds are being obtained much faster than what was there happening earlier in service tax. we have had experiences on this personally also, that it's not probably as so early as what government promised in many cases, but at least it is much better than the earlier regime. So the significant difference in approach or procedures which is required under GST, or under GST the officers are much more pressure to give a refund. But please bear in mind that all that comes with a huge risk. What is the risk is future scrutiny, because what is being now given refund and all is being given entirely, but nothing stops from the officer to come back at any point of in future and deny his refund if you are not properly claimed it. So your input tax credit eligibility and all what you have taken positions is not being reviewed by the officer at this point of time. He is presuming that your eligible credit is being getting refund. Some cases they do a sample verification and all, but beyond that they don't do anything. And some commissioner has issued a negative list of services which you will not claim a refund and all. Those are all actually not strictly as per law, but somehow they are doing it and people are also accepting it. So anything which is being given at, based on whatever you are claiming, please bear in mind that it can be questioned at a later point of time. So accordingly you should be kind of taking note of that and ensuring that you are properly claiming a refund.
Sir, what is your view about interest on delayed refund not paid well?
See, I think under the earlier law or GST, because GST I would say it is much more improved, but yeah, see, it is coming down to practical aspect only. Many companies want interest but are not kind of forcefully enforcing it because they fear that next claim will be not processed properly or they will not kind of be in good books or not. There have been rulings saying that if there is a delay of filing refund, it has to be given interest to be given. So law aspectly are very clear. You have to get refund for interest for the delayed refund. But then there are a lot of interpretation also. If the division memo is being issued, then there is an issue. But nothing is issued and they are not paying within that 14 days or something or 60 days which is there, then you are entitled for interest. And you can claim it also. So in the past service tax also this happened that they used to get a declaration from saying that you will not claim interest and grant you refund. That is not all lawfully correct, but that is how it is happening. But many companies were saying that at least let me get the principal back, forget about the interest. But I would definitely give it to the government that in the GST regime it has been much more faster. I will not say across board, of course you will have a different experience if you have not got it, but majority of the cases I don't see a complaint, especially rebate is much faster. We are getting rebates in 1 week also. Refund input is
still facing problems in inverted duty structure.
Inverted duty structure, okay, I will have to reserve the comment because you are right. Because that is an area, to be very frank, nobody is clear actually. Especially on input services which was not allowed or it was denied retrospectively. It was never the intention to allow actually. We were trying to get an interpretation and try to claim it. It was never the intention to allow input service. And how to calculate is a big issue where they have kept it very open. They were thinking that you will only do trading for input as if it will be 18%, 12% and all. It's not as simple as that. Because many companies are actually doing manufacturing also and getting input inverted duty structure. The companies which are exporting and also getting inverted duty structure. So a lot of that nitty-gritties they are not able to understand, and I think that will take time because it's a learning curve for both.
Lakhs are pending,
yeah?
15 lakhs are pending for this.
Crores are pending. We have a case where crores are pending also. But I said the concept.
Seriously on the working capital.
Yeah, definitely. I'm not denying that, but as somewhere I think the government also has to guide the officers because as an officer, for me also it will be difficult for me to process the refund because there's no clarity on the methodology, like the anti-profiteering, how to follow the anti-profiteering guidelines. Each one is saying something different, so there's a lot of ground level clarity issues there. Inverted duty structure definitely there's a challenge. I would accept it. So if you look at the zero rated supplies of SEZ, we talked about something. Actually, they have specifically clarified that even management service, hotel accommodation service also shall be eligible. So, from a law perspective, I don't see any challenge in getting the benefit of zero rated for supplies. It's a ground level challenge is always there, and that is where we're getting stuck on them. So, I would think that it should be eligible. So these other 2 points are very specific to industry. I wouldn't want to cover it. So I would just cover some few points on the way forward. we have talked about certain recent developments and obviously some of the points which are critical. But what is in store in GST for next, say, 6 months or 1 year? What is it we should expect? One is obviously the forms which are going to come. They are saying simplified forms, Sahaj, Sugam, like income tax. They are also coming with new names for new forms. We are expecting it somewhere in January. They will do a testing kind of a thing, or a draft form. They will release it, and thereafter, I am expecting not before April. I think that's what I would be realistically. April is where we will get a new form. But new form, the understanding is it will be a simplified form, one page form or one form. So, but that doesn't mean that your GSTR1 will go away. GSTR1 name will not be there. You will still be asked to upload the invoice details. So output invoice details will not be dispensed with. The GSTR3B will become the simplified form with some other modifications, but the invoice level details will have to be still uploaded in the GSTN. It is only that it will not have a specific time limit. It will be like a real time, anytime you can upload. Whenever you want to upload, you can upload. So we need to see how the new system operates, but more importantly, please understand that this new form is not the end of solution or end of the problem for the vendor reconciliation. People are thinking that after new forms, everything will be like as usual before the GST. I will not do any vendor reconciliation. I can just take rate and whatever based on invoice I have, I can just do the transactions. But it is not the case. Even after new form is issued, the reconciliation aspect is also important. It's just that it will have a different mechanism of addressing that point. I think the biggest learning from GST is how far or where the gap is in terms of our technological kind of equipment, in terms of how we handle it. I think the kind of GST showed the weakness in terms of companies and also some of the professionals where we are not able to handle the technical challenges of GST. Of course, we are not expected to be IT software professionals to understand the programming language and all, but if you are not comfortable filing an online return filing, or you are not comfortable with Excel's doing an upload, then you are left out. Not only from a professional perspective, company perspective, you not even file returns. That's how it is. And more technology focus is coming up in GST because they believe that, I think, considering the volume and considering the extent of what you call in terms of operations which is happening, and with the overall concept of self-assessment and simplified regime, the only powerful tool for the government is technology. Look at the amount of information the government today has in terms of the invoice level details of lakhs of taxpayers across the country. This information is directly going to income tax, very clearly. And you should know, you should be aware of the fact that also in the first year of GST implementation, the biggest gainer of it was the income tax department, because the income tax collection went up. GST collection came down, but income tax collections actually went up because the disclosure had to improve. Because once I disclose for the purpose of GST1, I can't just withhold that invoice purpose of income tax. Obviously, the levels of self-assessment also will had to improve, and of course, with a lot of investigation and raids by the government, also they were trying to address that point. But still, the government is struggling with one point: is the matching concept. What you have filed and what the buyer is claiming, is it same or not? The government is not able to still match it. That is where this whole debate about 2A, how it should match and all, and that is where if you see a lot of raids happened in Karnataka and other few other arrests also happened, saying that there were a lot of invoice trading happening, which is true also, which is nothing far from true also, because multiple companies just trading invoice without actually goods moving, and that is where they were adamant or very keen on implementing e-waybill, because at least if you have to now trade invoice, you have to have another round of kind of fraud, which is to be also duplicate the waybill, which is not normally easy. So assuming there are 10 people who are willing to do the trading of invoice without anything, it will come down to 6 people, because now they will have to at least do a e-waybill also. And tomorrow, if they are going to reconcile the e-waybill with GSTR1, you will see much more kind of gaps coming out from the department side, and they will take more of action. And the most important point is GST is in a very early stage and honeymoon phase, if you want to call it. So the department's response and kind of their action is very limited, except for the high level frauds. They're not coming to the audits, or they're not coming for normal kind of visits and all. Come 6 months more or 1 more year, you will see much more detailed scrutiny from the department also, because today also they don't have much of work actually. That's a fact. The work level has reduced significantly for many of the officers. They're only doing earlier pre-GST assessments or something if it is there. Otherwise, they are not having much of daily based activities. So just a matter of time then when they will start looking at the data, and the more and more technology is there, more and more equipped the data will be there with them. What would happen in GST, the way we are imagining is that till now what was happening is, they came for audit, you gave the information, they reviewed it and they found something. Tomorrow they will come with the information and challenge you and ask you questions on that, because they will have all the information. Today also, if you look at some of the audits are very intelligent in saying that we have found some specific payments made by you to related party in this period, give the details of that. So the sharing of information has happened from, say, banks to the GST department or service department. It has happened from income tax to GST department. So much of sharing is happening in background which we are not fully visible to. In GST, the information is much more going to be robust, and they are going to come up with a lot of analysis before they come to you. So we must be geared up for it. If the department is geared up for it, we should also be geared up for that kind of a requirement. So this 1 year position, you have to take a call as to what has happened in the last 1 year. It's a good time to actually review those transactions and see whether you are taking the right positions. If not, can you just pay it off whatever is there's a liability, and don't wait for the department, because once they come, all the penalties and other things also will follow. So better to do it at this point of time itself, where you can do your own review. Like I said, the advanced ruling is also a very important aspect, where you have some clarifications. Please clarify at this stage itself, even if it is negative ruling, but please be sure that it is a certain ruling, so that you just go based on that position. It's a very important kind of avenue for compliance which we can use. Next is what we are expecting is also fewer rate slabs. Already, if you look at 28% has significantly reduced, now only less than 50 items are coming under 28. There is a possible merger of 12 and 18% to 15%. They may merge 12 and 18 to 15% is what expectation is. It will take time, and if election is going to happen, it may not happen before election also. It may happen after election also, we don't know. But that is a very likely possibility, because service is now being taxed at 18%, which was only 15% earlier. So there's also a 3% cost increase in service. And they are finding it that the lesser the rate, the better the compliance would be. For that, they need the comfort. Today they don't have the comfort, because the collections are not that buoyant which they are expecting. But contrarily, states like Tamil Nadu and Maharashtra has got much more than what they thought. They were expecting a lower revenue in GST, but they've got higher revenue in GST. That is very obvious, because we were always of the view that states in Tamil Nadu and Maharashtra will not lose out, because the service consumption is very high here. A more state is industrialized, the more service consumption will be there in the state. So effectively, you will have more of service GST coming into the state. So it's very obvious, and that's something which is going to boost up revenue also. But having said that, there's still a lot of gaps in collections. So if the collections improve, probably they will bring up the rates to 15% and combine 12 and 18, because 12 is not much anyway. So it's only a question of 18 bringing out to 15 is a loss for the government. Petrol will come under GST or not is a debate which is happening. I don't know, it's a purely political debate, nothing to do with GST. So we'll have to see what happens to petrol. But alcohol also will not come, because states have one power that also cannot be taken away from the GST. What is going to happen immediately is probably aviation turbine fuel, which is be brought into GST, and that is something which will anyway not impact all. That is something which is expected. So I think to sum up, in my view, the way the approach of department and how the overall GST compliance is going to happen is going to be something which we are going to experience new, and we have to be geared up for that. From a professional perspective, I would expect that we show much more interest in this area, because it's a very, very happening area, if you want to call it, and also the fact that there's lots to learn and a lot of interpretations, enough for the next 10 years for any litigations and all those things. So you have an opportunity. It's not a question of lack of opportunity. But then the position is very important. Are you in a position to kind of help the clients in terms of assisting them on their compliances and also these aspects on a regular basis? And how are we updated and how can we gear up to the lot of updates? Because that's the most important challenge. The updates are happening on real-time basis, and even if you have all the databases in your domain, it is not going to be enough because simply the numbers are too high. Every now and then I get a WhatsApp saying that, oh, this ruling has come, this advanced ruling has come. For you to even look at the ruling and try to understand before that, somebody is giving a comment saying that this will increase the cost and all those things. So that's how it is being debated like some kind of a political chat. So this is going to be the order of the day for a few more years probably. But I think as a professional, we have excellent opportunity in GST. And with all the issues or challenges, I think we can still look forward to a good experience in GST moving forward. Thanks for your time. I'll be happy to take questions if any on the
So this is regarding that press release or something which came in. There is no central state wall between the offices.
Yeah, sorry, I could have covered that point. I intended to, but I didn't. So what they are saying is that effectively there is a cross-empowerment of the officers, and this officer can actually audit other officers, or there is no wall. I think that is being wrongly interpreted. Only in case of a serious tax evasion that kind of situation can come. But that should not apply to a routine audits and all. Normally, if you are under state jurisdiction, then you are expected to be audited by the respective state officer only. The state central officer cannot come into jurisdiction. But if there is a serious tax evasion or something like a offence being committed, they are saying that we will not wait for the state officer to take action, we will also take action. That should be only limited to the particular act, and there also after that whatever raid has happened or something, it has to be given to the state officer for it. So it cannot be applied to suggest that every officer has power to do an audit in other offices. That is not the interpretation, that is not coming out from the law also. In fact, that circular from I think Haryana government was there, that is likely to be challenged also. That is not a good circular in my view. The way it is given as if it is everybody can do anything, that's not the intention.
Any quantum limit for state government and up to 5 crores Tamil Nadu state government?
Not like that, no, it is always, they have a random sampling. So they had a what you get turnover limit for some particular, I forgot the turnover limit, but beyond that large assesses were granted based on a random sampling. We don't know how they actually bifurcated that between the state and center. That information is not available. In fact, for the same company, in one state they are under state and one state they are under central government. So there is no system logic to it which we can derive.
So there's one general question regarding this ISD. See, some of the companies, I don't have any such cases, but I was given to understand like they are not going for ISD because the head office purchases a server. That is not covered under ISD because it's a capital equipment. So instead of taking an ISD, they take a regular registration. They charge to that branch whatever is there, and they use that credit, input credit, and do it. But will it be accepted by the department?
See, there is again an interpretation. What they are banking on is that there is no revenue loss to government. That is the only thing. By doing this, I am not having any loss to government. You are saying that I should not take credit, but I am taking credit and setting off the liability. So the government is not losing anything. But then the timing may be different. You take credit in 1 month, and 3 months later also you can do a cross charge. So you are enjoying credit for 3 months, which is not right. And there are again two types of things. One is which is exclusively related to branch, but you are paying here. And second is a common thing. On common, there is a possibility that it is actually only a cross charge you should do it and not a ISD, because ISD is something which is relatable to one or more unit which you are receiving at office. Moment it's consumption of head office. It's like a service consumed by head office, but it is for other branches also, so it has to do a cross charge. There's a slight difference there. But as long as you do it on the same month, I don't see a negative impact for that. They can defend it. But if you ask me strictly, you should go by ISD only.
ISD, the problem is saying
capital equipment will not.
That is where it's being dictated.
In Tamil Nadu, GST collection is less than that, or?
See, it is not less than VAT, it is definitely more than VAT, but it is slightly less than the, what they promised was the last year VAT plus some 10% collection. Last year collection from 10% some what do you call growth was 14% growth was kind of contemplated. It has been 13%, 12%. So it is less than the projected growth, but it's definitely more than that.
Yes, achieved a sales of 2 crores. And they are discounting at the year end. That is 30% cost. For achieved 10%. So what I have to do that?
Discounting at the year end means.
That for the incentive. That is our achieving. The company is selling, for example, I am selling more of.
So if you are able to satisfy the conditions, you can consider net turnover. If you are able to satisfy the condition of the supply, value of supply, section 15, you can consider net turnover and then still apply. The net turnover. No, if you are going to reduce it for purpose of the GST, then the buyer has to reverse credit. If you are giving a discount, the buyer whom you receiving the goods, they have to reverse the credit.
For example, you are selling products of Texmo. And Texmo is willing to incentive at the year end 30% cost.
Are they charging GST on that? Then leave it. I don't think there's any impact for the buyer. There's no impact. If they're not charging, I'm saying, are they deducting GST? No. It's not. Then there's no impact for you.
And in cancellation of registration, you told nil return needs to be filed till the approved by the department. So in case of merger, the transferring company turnover will be considered in transferor company return. So on monthly basis. So even though if there is any delay in approve that application, nil return needs to be filed for transferring company.
Transferor company or transfer company? You're saying about transferor company.
Transferor company.
Yeah, so transferor company, if it is not having any business after transfer, it is just.
It's having business. The business is continued, but the turnover of the after filing that application, the turnover will be considered in transfer.
That is fine. Nil return is only for GST and no. Moment you have other business also in that GST, you will have a not a nil return. I said only if you don't have any other business in that particular GST, then you have to file nil return or not. In your situation, the transferor will have other business which he will continue to have. No?
So the whole business is the company itself merged.
Then if it is a court merger, where it is done through court, the old company is getting liquidated, then there can't be any filing of returns.
Yes, so nil return need not.
Yeah, I was talking about a situation where only business transfer happens, not a court merger, because court merger will not be any company surveying the transfer company.
Okay. Similarly, the final return you mentioned that.
What is your control?
Just a minute. Yeah.
The final return you mentioned, the final return needs to be filed in case that the application has been approved before 30th September. But in case if it is approved after that, subsequent to that, the final return.
No, it can be. That is only for some transition period. People are not able to file. That is what. Going forward, final return you have to file if you are going to surrender. That's it.
Because
different.
one of my client last week they approved cancellation, so we need to file that final return.
Yeah, before cancellation you have to file final return. I don't think it's after cancellation. It is before cancellation. The final return is before cancellation, because once it is cancelled, you can't file the return at all. Final return, after filing final return only, you have to cancel it.
But we have not filed the final return, but it was approved.
I don't know. It is not. Sorry, sir.
When we do the exchange sales, how is it to be treated? Is it to be treated as a discount?
Exchange means?
Exchange sales.
So exchange sales in GST is be two supplies. It's a barter. You are saying exchange means you are getting new old product for new product.
Yeah.
So that is a kind of barter under the GST law. So both sides GST will apply.
1,000 rupees material. When you are bringing back that, I am reducing to 200 rupees and I am giving it to you for 800 rupees. How is to be treated?
So strictly speaking, that is considered as 200 supplied by him to you and 1,000 supplied by you too.
Yeah.
There's an example also. So GST will apply in both ends actually. If it is an individual, then there is no question of him paying or you will pay on 1,000 only. Still.
How is to be accounted in his sales?
1,000 rupees only sale.
Sale is only for GST purpose. For your what you call the accounting purpose, you will still account net turnover of 800 rupees something, you can account it. But for GST purpose, it will be 1,000 rupees only. Because 1,000 rupees value of goods is only you are getting.
Will I be taken as a discount?
No, it will not be. Better for you to mention 200 rupees discount and give it as 800 rupees. That's what. If you say 1,000 rupees worth of goods I am giving and I am getting 200 rupees in exchange and 800 rupees in cash, it is considered a sale with partly consideration in cash and partly in goods, non-cash. So you have to pay GST on 100 rupees only. That is how it is. Because in GST there is a transaction barter itself.
What is your control over the buyer reversing the credit?
Declaration. That's the only option. Because it's your liability deduction is directly based on that as per the law itself. So if you don't have the control, then you will be questioned. In fact, notice has been issued in the supplier's hand saying that your buyer has not reversed credit, so you have to pay tax.
So goods in my premises, what will happen to me, sir? For my old goods, what are all lying in my premises?
So you will scrap it, right?
How did I get it? What
No,
is
no.
the account for it?
No, see, point is that you are purchasing it effectively.
Where is the evidence for it?
No, point I'm saying is you have the stocks which is of the old goods. And you are saying the scheme itself has new goods in exchange of old goods. So there is a stock which is there. That stock, whether you're going to scrap it or not, you have to then subsequently show it. No?
For the receipt of the old goods, what is the...
You can have a DC or something, you can have a record for, or GRN kind of a thing for your purpose. The GST does not deal with the point, but from accounting perspective, you can have a record of the old goods which is received, so that tomorrow when you scrap also you can take back. So what I am saying is, moment you have an exchange scheme, you still have to pay GST on 1,000 rupees. Discount is only allowed when you are saying the value of goods is 800 rupees. 1,000 minus 200. The moment you are saying value of goods is 1,000 rupees, but you are collecting 200 rupees in cash, the goods and 800 rupees in cash, it is chargeable on 1,000 rupees. Anything else? Thanks for your time.
Friends, Mr. CAS Vinodh has given an excellent presentation. Please give him a big hand again. So on behalf of SRC and members present here, I present this memento to the speaker, Mr. S. Vinodh.